Good afternoon, all. Ira Epstein of Linn and Associates with your metals market wrap-up. And yeah, I'm on time today. And it is Wednesday, the 26th of June, 2019, just after 2:20 p.m. Central Daylight Time. Here's where I see us at. I think the marketplace as a whole is now getting into the G20 mode. In other words, we're waiting to see just what happens. There's so much going on, be it Turkey in the U.S., be it, as you know, China in the U.S., what's going to happen in trade and what are they going to go through? My money is on the fact that Presidents Trump and Xi get along just fine. They shake hands. They basically tell their negotiators to go back to the table. The negotiators go back to the table and nothing happens. That's what I'm expecting. I don't expect China to change its laws. I think they're going to balk at it. I think President Xi, he has nothing to lose. He's not up for an election. He can wait and see what President Trump wants to do. In other words, is President Trump actually going to be our next president? Another thing he'll look at. And President Trump can't bring home a deal that isn't signed, sealed, and delivered. He can't give in at this point. So I envision friendliness, the market liking it at first, and then reality setting in. Am I right? Who the heck knows? We'll find out. But you can see you got very quiet in stock market. Gold market, in fact, most of the metals are starting to back off, as you can see in this at this hour. So we're getting a bit of a correction with the dollar index pretty steady. You've put yields back into the bonds and notes, but that's probably more of markets evening themselves up getting into this G20 than anything else. And you had a big rally today in the energy complex into the gasoline, heating oil, and the crude products, and that is because the EIA number blew away the API number of yesterday. Yesterday's API number showed a net draw of over 10 million barrels. Today was like 13 million net, so it was even bigger. So that part you're getting from the market, but it still couldn't stay up near the highs of the day. Interesting. I think world trade has got the market nervous. When you take a look at a weekly chart of closes in gold, it's a runaway. Bitcoin's a bigger runaway. Bitcoin today's up 20%. But you look at this, a run to the upside. The market on a closing basis up for the week about $17. When we start looking at the daily chart, we're seeing little bits of pullback finally. But this market, let's not kid ourselves, it was a straight up spike from 1350 almost to 1440. You didn't have a shot in, this market just ran. So does it need to consolidate, maybe correct a bit? That could be what's going on. We have the pattern of higher lows and higher highs. That's bullish. The market is well over the 18-day average, which keeps climbing now each day away from the last break low. So support in the market, if it were in a perfect world to come down, that line in the sand, as I like to call it, wherever it comes in, I'm looking for that, if the market can break further, to be a potential support zone. As for why is the market breaking back today, I want to go back with you with what we talked about. You had 1, 2, 3, 4 days in a row where you closed over the upper Bollinger Band. That's these black line here. The lower band is right here. The theory of Bollinger Bands is the market will close within them 95% of the time. I ask you to go on your own and open your charts and see how many times you close over or under in succession. And you'll come to the conclusion, or similar to mine, that gee, if you count each successive day and you subtract that day from the 5% rule, you get very close to where, like I had come in today, I gave the market a 1% chance of staying over that upper Bollinger Band. Another way of saying 99% chance it was going to be underneath it. And the market finished underneath it. It's how that works. Did you break a pattern? No. Have you weakened this market dramatically? Not with what we're seeing here. Where the market could be ready to weaken is right here. If you'll notice, the slow stochastic readings got both numbers over 80, and that'll be on a closing basis today too. It was over 80 yesterday, the day before, and the day before. So I got my 3 or more days in a row. If you lose that on a close, what happens is price in the 18-day average often make a run at each other. The word is not always, the word is often. So you're going to be, because of how you're closing tonight, the odds of this market opening with the red line under 80 are very high, probably in the 95 or higher percentile. And when that happens, the question is, do traders back away from the market or not? As I said, this market can afford a break and still stay bullish. In the GLD, it did the same thing. If I take off today, you've got those same amount of days. You got up there. I'm sure I said the same thing yesterday. And here, you're still open in this market. You haven't lost the embedded reading. And it's actually stronger than the gold futures because this red number, the value is 84, the other's 80. So getting under 80 is my fear. That's further away. When we come to GDX, what we had yesterday was a key reversal day down, an outside day down, and you're getting your follow through on that to the downside. Still have the embedded reading, still bullish longer term, but you're at a zone where the markets run into resistance. When we come to the gold-silver ratio, it still does not favor in any manner the silver. Now, I have switched gears and I'm using now the August-September silver for that ratio, okay? So August gold, September silver. But you're right up here to 92 to 1. These are numbers you haven't seen in many years. In the silver, you can see how the market ran out of its momentum at that upper Bollinger Band, pulled back, and we thought on the first pullback, I'm sure I said it yesterday, the 100-day average is likely the first support. The question is, if it gets through that, does it make a run down to the 18? But something else has happened. You now have a pattern of lower highs, lower lows. So this market's, number one, not in an uptrend. The bias is up. The trend is defined by the swing line is down, and momentum is in a corrective mode, got overbought, and it's correcting. In the copper market, you have a pattern of higher lows, higher highs, but as soon as this market got to that upper Bollinger Band, it did move it a fraction higher, but nothing material. And that's your resistance point, is the market scratching its head, properly so, saying to itself, gee, if they can do something real good out of the U.S. and China, this has got to be one of the benefactors, and I would think so. And yet, if it's just what I'm saying, they agree, they look good, they send everybody back, and there's really no deal or no appetite for a deal, this market up here looks a bit expensive. I'll let you figure out which one that is. It's going to be rough. You're overbought, you've hit upside targets, you're still in an uptrend. In the October Platinum, you have the higher lows but lower highs. I think you're out of a trend. You're just stuck in these Bollinger Bands running against the 18-day average of closes, a market that's just churning and not moving either direction. I can make an argument here that momentum is still pointing up. I can make an argument that with the price where it's at, it's over the 18-day average, the bias is up, and the legacy has been one of higher lows and higher highs. I can't get away from the current pattern. Forget the legacy is lower high, higher lows. So I do think you're very much still stuck in those Bollinger Band areas. In the palladium market, as long as you have this embedded reading, I'm bullish. Why wouldn't I be? Higher lows, higher highs. Lose that, I'll change my opinion. Don't lose it. I still see this market as being very much in the bull camp. And I'm not surprised to see the dollar had a key reversal up, key reversal down in the euro. They're like mirror images, and the market just sort of sitting here with small gains today in an oversold condition where the market has come down and stalling a bit, probably waiting on the G20 and what that's going to do. Now, one of the things that I do first thing in the morning for my traders, my subscribers, is I get up and I record an early morning video. Now, let me tell you what early morning means. I'm typically recording this 6 a.m. Central Daylight Time. I want to be ahead of all the U.S. reports. I want to be able to review with you, and I do it, and the charts will look just like this. I won't be in them. It's my voice and everything. More studies than you see here. But I'm going to review with you what went on in Asia, what went on in Europe. You're coming to the table, so to speak. You're looking to see what's the market look like to them, and I review in the same sequence every time. I do that because you can either pull on the recording, the bottom, it'll tell you what section you're in. We also have a small lexicon on the side. You can click that and get to wherever you want. You don't have to go through every section. I do because there's a flow to the market that I like. There's so many things that are intertwined. So what I'm going to do is I'm going to talk the chart action. Then I'm going to tell you what I think the pros are doing, because I'll have had a chance to read at night who's buying what, where they're at, our different sources here. I'm going to go through the technicals and fundamentals, and then what I can do, I can say buy here, sell there. I don't have to be generic. And the reason is you need a user ID and password to see this. It's not out there on different websites. You can get it with your handheld phone device. You can get it through our different charting software or just on my website. The cost, and there is a cost, 26.5 cents a day to give it a try. 30-day commitment, $7.95. After that, you have a choice. You can either go every 30 days for $15. You can buy a one-year subscription for $156. Your call. That $156 works out to $13 a month. I don't think you're getting advisory services with what I'm putting out, anything for a price like that. How do you find out more about it? Well, you can either call my staff, they'll work with you, or you can go to our website under the word education or research. You'll see a drop-down menu if you go there. Look at Ira's morning subscriber video. It explains the whole thing, and you sign up for it right there if that's what you decide to do. You can get to that also by clicking right here if you're watching me on YouTube, and it'll take you where you have to go. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.